In this video, I will be speaking about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will speak about the on-chain data by looking at the exchange reserves, so how Bitcoins are moving on and off from exchanges. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing exactly the previous cycle high. From here, the previous bear market was developed. Here we had the halving, the market entered into a bull market. Then we had the bear market, which in my opinion ended exactly here with the test of the previous cycle high. And at the moment, the market is rejecting the level to the upside. Now, in a situation like this, we could expect more bullish price action to be created away from this zone. So on the monthly, everything is looking quite bullish. If we zoom in, we can see how, if we look at the structure, the market currently is rejecting and breaking above the previous monthly resistance, which was resistance here and again here, which is now turned support. Now, if we drop down the weekly time frame, what do we have? From a weekly perspective, I did speak about BTC USD a few days ago when the market was creating this move to the downside. I explained all the reasons for which I wanted to see first this move to the downside, stop hunting all the people that had their stop losses below this low, and after that the market could create the move to the upside, which is in fact exactly what the market did. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. Now, in a situation like this, we could expect more bullish price action to be created if the market will exit from this range. In fact, if we go down on the daily, we can see how the problem that we have at the moment is that we have a range bound market. We have the top of the range, which is currently here, which is acting as resistance, and at the same time we have the bottom of the range here, which is currently acting as support. And we can see how the market has been moving sideways. Now, until we will remain in this range, we cannot be looking for any kind of movement here. Now, if we go and see what we have when it comes to the on-chain data, we can see that the black line is the price, the purple line is the amount of Bitcoins on exchanges. As the price was dropping, the amount of Bitcoins on exchanges was dropping as well. Now, this creates a quite illiquid market because those Bitcoins are less likely to be sold into the open market, so that if demand gets increased or if the amount of Bitcoins emitted into circulation gets cut in half, price should increase to accommodate for this new demand. So for now, we don't know if the market will manage to break away from this range, either to the upside or to the downside. If it will break to the downside, then there are new considerations that we have to keep in mind. However, what we know is that things would definitely become very interesting if we get a break above the range, because after the break above, this previous resistance would become support. So if the market manages to break after a break on the retest of this previous resistance turn support, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis, education, and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.